Market forecasts for the S&P 500 for the year end. And as we now get closer to the middle of this year, I guess we're almost towards the end of month 5, and we have one more month, and then we're at the midway point. You start to get analysts and predictions of how the year will end up. And I'll put up a quick chart here about some of those forecasts. BMO Capital Markets issues the highest S&P 500 year-end forecast as yet. You can see it there, 5,600. S&P 500 in and around 5,300 right now. So if you do the math, you're talking about maybe another 5-6%. If you look towards the end or the bottom of that chart, you will see that there are many, JP Morgan, Citi, Goldman Sachs, predicting that markets will not go higher at this point. And some are predicting the market could go significantly lower. Now, I will say that a name like JP Morgan, very often they take their estimates up once they see that the market has gotten a lot ahead of itself. You could see the market or the prediction change very quickly. So I would say you need to take some of these recommendations or predictions or outlooks with a grain of salt, because you never know, when these get changed, either to the downside, to the upside. But the one thing I will say is this: when we do have so many people, so many analysts, so many investors talking about where the S&P 500 will be at the end of the year and how it will be higher, and I believe it will be higher, you can't help but to be a little bit nervous when everybody's all in the same boat, same side of the boat. Well, the boat starts to tip a little bit and it can cause a little bit of problems. And you always have to be mindful of that one economic piece of data, the economic data that could cause things to change, that one announcement, that one event. And if it catches us all by surprise and we're all on the side of the boat that says the market's going higher, well, we are, I guess, liable or setting ourselves up for perhaps a pullback, and perhaps a major pullback, maybe a 5 to 10% pullback. Now, that's not really major, that's expected, but I think a lot of people, if there was a 5 to 10% pullback in the markets, I think they would be caught off guard. And in April, quick story, I had conversations with a few clients, and they said to me, Alan, see, the market is down in April. I'm a little concerned, but I don't want to sell because market is down too much. I want to wait till it comes back up. And it was interesting because I said to them, well, the market is down in April, but keep in mind, January, February, and March were such good months that even though the month of April was negative, it just lost back a small piece of what the average investor made for the first quarter. And then here we are again in May, and the markets are back higher, making up what April lost. And for some clients or some investors, a little more than that even. So I think you just got to keep a level head. You got to keep a level head. There's going to be analyst predictions. There are going to be a lot of people talking about year-end numbers over the next, let's call it 4 weeks or so. They're going to make predictions. And then once we get into the second half of the year, just wait. We're going to get 2025 predictions. Market is always anticipating, always looking ahead 6 to 12 months. And that has never changed and probably never will change. So try not to get caught up in all of that. You want to look at your portfolio. You want to stay diversified. You want to stay in areas that are good growth, that are relatively good value. As we always say, if they pay a good dividend, that's where you want to be. So I think you want to take a bottom-up approach versus a top-down. Not worry about where the index or the indices will end up, the S&P 500, the TSX, whatever, where that's going to end up by the end of the year. Let's focus on building good portfolios and individual investments, because in my opinion, that is the best recipe for success.